Hi guys, how are you? Today we are going to see company's balance sheet, format of company's balance sheet and accompanying notes or notes to the balance sheet, right? In the company's balance sheet, as usual, there is no difference in that. Uh, Here we used to give notes. Earlier we don't give notes uh, in questions. When we are answering, we put all the things in balance sheet. Here, for publication purposes, to train you in such situation, this is the base. Okay, where we do not put all the balance sheet items in the balance sheet, right? For an example, if you say property, plant and equipment, then we have a separate schedule or note saying property, plant and equipment. In that, you can find accumulated provision for depreciation, and you can find the cost of the property, and written down value also you can find it there. So such like that, so we will get the note property, plant and equipment. That is the one note. So one figure, total figure, will only appear in under the assets, non-current assets, okay, in the balance sheet. But we will give notes in the note column. So if you want to see the what the property, plant and equipment consists, so you have to go refer the notes. In the notes they used to give in detail, right? So I am going to give you provide the format for the um, balance sheet and notes to the balance sheet. Okay, so here we see company balance sheet format. First column is description, right? Notes second, third is amount, right? First of all, we used to have assets in the balance sheet, first column, okay, and under the assets we used to categorize the asset like non-current assets and current assets. As you know, non-current assets are the fixed assets, right, which cannot be liquidated within the year of within the within 1 year, means within 12 months period, right? If you can liquidate that asset within the period of 12 months, then you will categorize that under the current assets. So that is the difference between the current and non-current assets, right? In the non-current assets, first of all, we used to see the property, plant and equipment. Property, plant and equipment, that is property, plant and equipments, right? We will just go through it and later on we can see in detail. Non-current assets, we used to have property, plant and equipment, right? So it will go, total amount is there, that is tangible assets, that is known as tangible assets. Next one is investment on properties. Whatever the investment you do in the properties, that you will show it. Intangible assets, that is I will show you intangible assets. Whatever intangible assets, you will disclose that. And investment, whatever investments you made, that comes here. Current assets, inventories, right, trade and other receivables, other current assets, cash and cash equivalents, and total assets, right? This is total. Thereafter, under the equity and liability, right, equity and liability, you get capital and reserves, right? Capital and reserves. Thereafter, non-current liabilities and current liabilities. Here you have three categories. That is equity, and under the equity and liability you have two categories. That is capital and reserves. That is one section, and next section is non-current liabilities, and third section is current liabilities, right? Under the capital and reserves, you get a stated capital, what how much the we have issued, that is stated capital. Common or ordinary shares, that is okay, stated capital which is common or ordinary, right? That is 9, right? Note number 9. Other stocks, maybe other available debentures or whatever it is, and reserves number 10. So we get here total equity. Thereafter, as usual in non-current liabilities, long-term loans and liabilities, that is you may know, deferred tax liability, long-term provisions, etc., etc. Current liabilities, trade and other payables, current provision, current portion of long-term liabilities. Okay, current portion of long-term liabilities, and current tax payments, right? And short-term provisions, short-term borrowings, everything is there, and total liabilities and total equity and liabilities. Here I gave notes to the financial statement. Note 1, note 3, and note 4, note 5, note 6, everything is here, right? Here in assets, in non-current assets, you have property, plant and equipment, right? So you will get the format, right? In this I have given out the format of note for the property, plant and equipment, that is tangible assets, right? Here I have given note number 1 at cost, note number 1 at cost, right? First column cost, you will give the narration of whatever maybe the items, buildings, vehicles, furniture and fittings, office equipment, etc., etc., right? In the opening balance column, second column is opening balance column, right? Opening balance, whatever the previous year's closing balance is the opening balance of the current year, right? So we can get the opening balance. Thereafter, whatever additions, whatever the purchases we have done during the year, we used to put it inside the additions, right? And disposals, whatever the assets we have sold out, properties and plants sold out, can be mentioned here. Disposals have to be mentioned here. We have to mention that here, disposal, right? And closing balance, right? That is the closing balance, right? Right. So when you, with the opening balance, you add the additions, deduct the disposals, then you will get the closing balance. That is what we have mentioned here. Here, depreciation cost, that means depreciation of each and every item we have given out. Opening balance, that is accumulated depreciation. So addition, whatever amortization we used to do, or whatever the depreciation we used to make during the year, we used to mention here. During the disposals, we have to take it out the accumulated depreciation portion and transfer it to the disposal account. So that disposal, during the disposals also, we have to remove the accumulated depreciation part that we have removed here. So after that has to be deducted from the opening balance and the additions, right? Then you will arrive at a closing balance, right? Here depreciation net value is there, cost net value is there. if you want to find out the what is the written down value, you have to, here we have to mention here written down value, written, right, written down value, that is this minus this minus this, that is here we can mention here written down value. Okay, cost net value minus depreciation net value, that is the written down value of that asset that has to be taken out to the balance sheet. Okay, so that is that. So we have, you have seen the proper format of note number 1 for the property plant and equipment. From this you can take the depreciation for the year. Here this addition is the depreciation, this addition is the depreciation for the year. Okay, so you don't need to that from this you can take it, you don't have to prepare the any other depreciation workings for profit and loss account, right? Here itself you can make it. So we have given out property plant and equipment format, we have seen for the tangible assets. So investment on property, investments on property in the sense, you, as you know, there is no, we don't need to mention this here, right? Normal investments, whatever the purchase of assets, right? We go for the intangible assets. Intangible assets, do you have any idea of intangible assets? Do you have? Because we have seen one of the intangible assets during the partnership accounts. Can you remember that? That is goodwill. Goodwill, it is an intangible assets, right? And second one is trademark. Trademark also intangible assets, right? Patent. Patent also intangible assets. Other one is development expenses, expenditure. Development expenditure. Whatever the development expenditure we have done, we have capitalized here, right? That is mentioned in the development expenditure. These all balance asset, here also we used to mention that balance as at the beginning and the costs incurred during the year and cost of amortization done during the year. Amortization, it is the new word for you, that amortization is similar to the depreciation. That means we are going to write off periodically a consistent amount or one on the percent, based on the percentage, right, to write off that, right? So that amortization has to be deducted from cost brought forward plus cost incurred during the year. So you will get the year end balance, right? This is the year end balance. This is the presentation for the intangible assets, right, in note. Okay, have you got it? Okay, so we have seen two notes to the accounts, right? Intangible assets. And next one is investments, right? Investments. Fourth one is investments. Investments, it is just like for your level, I think this is a little bit more advanced, but anyhow I will give you an idea only. Later on you can uh, see you can see my lectures in later on sessions in depth, right? What is the investments? Yeah, this is there may be a investment, we would have done investments in the companies, that may be one is subsidiary or subsidiary company or associated companies or in other companies, right? That is three type of companies where we can make an investment. So here we have mentioned subsidiary company. Subsidiary company quoted value is their shares, right? How much is quoted and cost how much, what is the market value, we have to disclose that, right? And non-quoted value company in the sense what is the share, what is the cost of share, and what is the market value, we have to mention. And associated companies quoted value is there and non-quoted company value is there. So shares, number of shares, cost, and market value. So in other companies, it may be a normal companies, not quoted, right? And non-quoted and normal companies where we have a small amount of investments. That companies we used to mention here, right? Other companies. So there we won't have a market value for the other companies, right? Subsidiary companies are companies where our company have a holding of more than 50% of shares. That is, we have a controlling power, majority controlling power. That means almost more than 50%. That is coming under the subsidiary company. Associated companies are the companies where we have a not controlling power, right? Where we don't have a controlling power. That means it is with 40% or like that. So that companies are those companies coming under the associated companies. So that is the difference. We can study these things in depth later on. Here if you have some sort of idea only, it's enough, right? So we have given the investments, that is investment in the subsidiary company and investments in the quarter associated company and other companies. Okay. And next one, we see inventories. Okay. Inventories, you had to mention raw materials how much, work in progress how much, finished goods how much, right? That you had to mention. That means here it is the closing value, right? Understand? And from that we have to write off the obsolete stocks. Obsolete stocks you have to remove from the current stocks. Obsolete stocks are stocks where we do not we obsolete stocks are stocks which are part of our stocks for a long period of time, right? That means unmovable and it is not usable and it is obsolete, cannot be used, right? That is the obsolete stocks. So you have to write off that. So we have written off and we have deduct this amount, right, and get the final amount. So in inventories we had to make it such a way, right? And number 6 is trade and other receivables. Trade and other receivables. In the trade and other receivables, you have to mention what is the trade debtors. You have seen that trade debtors, and here we are providing a separate note to the accounts, final accounts. So here trade debtor, from the trade debtors you have to deduct the provision for bad and doubtful debts, and you will arrive at the net value. And with that you have to add the staff loans and other receivables, since this note is for the trade and other receivables, that is I have given, right? Under the with the investments I have to disclose this one, right? Where I have missed out, so I have disclosed it here with the note number 4. With that one you can go through this also. Other financial assets also there are other financial assets under the investments, right? That is other in the investments we can financial assets, that means fixed deposits which fall more than 1 year, 12-month periods, right? So treasury bonds, right? These are the assets and liabilities, that treasury bonds or fixed deposits or development bonds or other securities that can be for 6 months, 3 months renewable, or 1 year or 2 year or 3 year or 5 year. Because of that, I am mentioning this one separately. uh, if it is coming under the 12-month period, you had to disclose this one under the current assets. If it is coming under the uh, more than 12 months period category, then you have to disclose this to the non-current assets, right? This is, I will mention like other financial assets, right? Commonly I will mention like that, other financial assets. You have to categorize this one, whether how it's falls into, right? Fixed deposit, if it is more than 1 year, then it has to go to the non-current assets, and if it is below 1 year, it has to go to the current asset. Like that, treasury bonds also, that is the treasury bonds, government development bonds, these bonds, other securities, these are issued by the government of that countries, right? So if you invest on those things, that can those investment treasury bonds and development bonds also same like that. It may be 6 months, 3 months, 1 year, or maybe more than 1 year, etc. Right? So because of that, I have mentioned here. Okay, understood? And other current assets, if whatever the assets do not fall within this one, you have to put the other current assets. Other current assets only you have to mention this fixed deposit, treasury bonds, development bonds, other securities, whichever which are falling within the 12 months period, right? And cash equivalents, that is cash and cash equivalents is under note number 8, right? Note number 8. This is not the note number 4. Please read this with the note number 4. That is what I mentioned, other financial assets. This is note number 8, cash and cash equivalents, that is short term deposits, and that means 1 month, 2 months, 3 months deposits, right? And cash equivalents, right? The cash and cash at bank, right? That has to be mentioned. And other thing is stated capital. We have covered asset sides, we have covered. Now we are moving to the equity and liability. Under the equity and liability, first we have to see capital and capital. Stated capital. Under the capital, you have to see stated capital, that is common or ordinary shares. Common or ordinary shares, that is stated capital means normal or ordinary shares, voting or non-voting shares, right? What you have to mention that whether you have voting for the companies. If it is in the public companies, when you purchase the shares in the public companies, there are two type of shares. No, not the two type of shares. Preference shares is the, ordinary shares is there. In the preference shares also you can have a voting power shares also there, non-voting power shares also there. In the ordinary shares capital also, share issue also, most of the time there will be preference shares. You sometimes they may have the voting power, but for the ordinary shares, definitely they will have a no voting and non-voting share capital. So if it is voting share means, in the board of directors meeting, or in any other meeting, you can have your representation. And for the selection of directors and those things, annual general meeting, the voting power is there for these shareholders to select the directors, to remove the directors. All the powers the ordinary shares who have the voting power have, right? Non-voting power they don't have. They cannot participate in the active uh, active business activities, right? So that is the voting and non-voting shares. So this item not at this level. We will discuss these things in later on topics. Okay. So next one is reserves. Now we can see note number 10, that is reserves. In the reserves we used to have uh, several type of reserves. Out of those reserves now we can see one is capital redemption reserves and revaluation reserves you have gone through, other capital reserves and general reserves and revenue reserve, right? Revenue reserves also you have seen in the past. Other type of reserves we can see later on when we are doing the sums, or in later sessions we can see. Other one is deferred tax liability and long term provisions, everything is there, but those when we are doing the accounts we can see. Trade and other payables, at your level. Trade and other payables are trade creditors and accrued expenses and other payables. Small borrowings we have done, those things will come under the trade and other payables, right? Other current tax payables and those things are different. Long term loans and liabilities. Okay. Another long term here non-current, under the non-current liabilities, long term loans and liability. Yeah, note number 11 we used to provide long term loans and liabilities, that is debentures and bank loans and other loans that we have issued during the we have got. If we have some sort of what we call the short of working funds or working capital, then the company has the right, and the company with the with the sanction of board of directors, they can issue the debentures to cover their capital requirements, right? Short term or long term capital requirements, so they can redeem the debentures also. Bank loans also they can get, other loans also there, right? Debentures and those things, redemption of debentures, redemption of share preferential share capital, later on we can see. Okay. This is the balance that also debentures, bank loans, other loans also. Balance, opening balance, such it has to be mentioned here. An amount raised during the year has to be added, and amount settled during the year has to be deducted, and finally we will arrive at the year end balance. Okay. From this opening balance, if you raising, you are adding and deducting the amount settled, then the balance at the end of the year. Okay. So I hope short term provisions are there, short term borrowings are there, right? With that, total liabilities and total equity liabilities. Total equity and liability should tally with the total assets, that is the balance sheet. So I hope you would have understood this formats, and if this is very simple than the uh, profit and loss format. First of all, if you not gone through the profit and loss format, don't go through this first. My previous lectures, you go through the previous lectures, profit and loss on profit and loss format. After that, come and watch this one. Okay, that is very good and it will be helpful for you. Okay, I hope you would have understood, and I will allow you to have a full look in the uh, video and at the end of the video, right? So I hope you would have understood, and I hope to meet you in next session with the questions. Okay, thank you, bye.